Hey guys, welcome back. So it's been a week since my last video. I have been in a little holiday. I had friends visiting here. So I have been in a road trip and in a boat trip. So if you remember, if you're in Telegram, you know this already. I have been sharing a couple of pictures here and there of my trips. But anyways, my friends left today early in the morning, so I'm gonna be back to normal. And for all the members, I am going to be extending all the active accounts. I'm gonna be extending them for 2 weeks on top of your remaining days. So if you had the 3 months membership, I'm gonna be putting 2 weeks on top of your remaining time for all the active accounts for this week that I have been gone. I have been gone for 1 week. I didn't even have access to my computer, or very limited access. I only had access to my phone, so I have been on Telegram a little bit, but not much. But yeah, I haven't even looked at the market, made videos or anything like that. Let me start this video by showing a comment. This person left a comment in my last video, which was one week ago, and it says, what happened to the 2.5K and the 2 billion total market cap? I think this person means 2.5K Bitcoin and 200 billion total market cap, not 2 billion. And the long-term cyclical trends that no one else understands, etc. So this person is basically making a criticism of my previous video before this one, which was made 1 week before this video. So this video is 1 week old, and the video this person is referring to is 2 weeks old today. So in that video, I was talking about market cycles, and I was talking about the total market cap chart here, and I was explaining how there was a head and shoulder forming here in the beginning of the year, and how it finished forming and actually breaking down. So the target for this head and shoulder, I think anyone can see here, head and shoulder, the target for this head and shoulder was 200 billion. So I have been advising of this target since this head and shoulder formed and broke. That was at the end of January. I have been showing this for members, but 2 weeks ago, I made a public video, a free video on YouTube, talking about this and how the target was still 200 billion. So we got very, very close. I think the lowest we went one day, I think I remember it was 260 billion, the lowest we went, I think. So that was close enough. It's close enough for a target, but still, we are still going down. So the 200 billion target is still in play. But of course, this person made this comment when we were bouncing here. You see this little bounce here. So this person, as soon as they see a little bounce, they rush to the video and say, "Hey, what happened to your 200 billion target? You were wrong." And they are very fast to tell you that you were wrong and that your targets are wrong. First of all, in the video, and like in almost every video, I say targets are not always reached. So I don't make calls like I'm never sure targets will be reached. It's not how it works, and I specify that in every video. But the fact that this person thinks that we're going to go from whatever the price was, from 500 billion straight to 200 billion, all in a straight line without having bounces on the way, it just tells me you should not be in this industry. You should probably not even be watching videos for trading cryptocurrencies. You should be watching very basic videos for technical analysis before you actually think about trading. So, because it's basic, price don't go in the same direction in a straight line, not up, not down. You will have bounces. So I don't really know exactly what's your specific question here. What happened with the 2 billion total market cap? Well, again, I think it means 200 billion, which is what I commented on my previous video. But if you expect these targets to happen, to be reached in less than a week and without having any bounces, it just says a lot. You should not be trading or even watching videos about trading. You should be, first of all, learning the very basics of technical analysis. Okay, so with this said, now let's take a look at the chart for Bitcoin. So this is the chart for Bitcoin versus US dollar, as usual, 1 day candles from Bitfinex. And as I said before, we have been watching this bearish cross with the 200 moving average and the 50 moving average. This is a very, very bearish sign that we have not seen for years on Bitcoin versus dollar. So we have not seen that since the previous bubble back in 2013-14. So this is a sign of a bubble popping. Now, it's for sure the bubble popping. Are we for sure going to $2,000 Bitcoin? Well, no, there's nothing for sure. But so far, we don't have any bullish signal here. We don't have any bullish sign. Everything we have in the technicals is bearish. First of all, the price is below every single moving average, the 20, the 50, the 100, and the 200. And all of them are crossing bearish. The 20 and the 50, which is my first sign to sell, it crossed bearish long ago. So since then, it was not safe to go long unless you want to trade the bounces, but not buy the bounce to increase your position like people it's been doing, buying every dip to increase their position, and now they're losing a lot of money because, you know, if you don't have a target to sell, then you're going to lose a lot of money because we are very clearly in a downtrend. You should not go long here. You should go short. You should wait for the bounces and short the bounce. I have been talking about this for like more than 2 months now, since we were at 17,000. It's not time to go long. It's time to wait for the bounce and short the bounce. So unfortunately, I was not online. I didn't have access to the charts when we were reversing back down here, or if not, I would have shared this short position here for members. But I have been talking about this bounce and how this bounce would be perfect to short it after it finishes going up and it bounces on moving averages. And as soon as you see a clear bounce already, don't try to catch it when it's still going up, because it could have gone up a little bit more. But as soon as you see a reversal starting, you should have started shorting here, and you can now easily just leave your short open here, you know, and get a target down there. But now you're safe if you are in a short now. If you entered a short 3 days ago or 4 days ago, you're good with this and you can leave the short running. So I will be probably making a new video for members for targets to close short positions. I'm not going to be analyzing this right now on YouTube because I had a lot to catch up on the markets. I still have to study the charts and watch the news. I didn't even do it yet. But another chart I wanted to show here for this video, it was the Ethereum versus Bitcoin, the short that I have entered. I have entered only 3 trades in the past 2 months or so now. This was one of them. It's still running, and there's no reason to close this position. I am expecting Ethereum to go all the way down here. To this obvious support line down here, and from there I would expect a big bounce. Of course, if there's a reversal before we get there, I would be closing the position, but so far I have not seen any intention of a reversal anywhere, so we're still going down. I wanted to update on this trade because I shared, of course, the signal with the members. Some of them have entered at the same level with me. So this was one of my 3 trades that I entered here more than 20 days ago now, and the other one was Bitcoin Cash versus Ethereum. So this was a long position. I entered when the moving averages were going to cross bullish here, so we're still holding the position, but we are getting near the target, so I might take some profits when we touch moving average somewhere here. My target is exactly at 1.999, so 2 Ethereum per Bitcoin Cash. That's my target. I will probably be taking some profit here, and that's a 35% gain. I will maybe leave some some of the position running, but I would be taking some profit here at 2 Ethereum per Bitcoin Cash. And now this other line that you see here, it says increased from OMG. This was my 3rd trade. So I entered another trade, which was OMG versus Ethereum. It was a long position for OMG versus Ethereum. That was a losing trade. I bought it on a breakout, but it was a fake out, and it reversed on me, and it started to go the opposite direction. So I closed that trade with a loss of 14%. So I took a loss of 14%, I closed that position, and I immediately put that Ethereum back here for Bitcoin Cash. So I traded it for Bitcoin Cash. I entered exactly at that level. So when I entered this position here, is exactly when I was closing my losing position for a 14% loss. So since then, this is giving me a 12% profit. So it's I'm almost breaking even from my OMG versus Ethereum position. As soon as it gets up a little bit more, that will be a break even. So it represents I didn't lose anything for this position. But my other two winning positions are already in a 30% profit and still running. So this one has a 30% profit since I entered down here. And the Ethereum versus Bitcoin, it's I entered up here, and it's right now here. So I am for a 31% profit and still running. So when you enter a good position, you let it run. Of course, you need to have a target or a plan or an idea of what you're going to do. But if you are in a losing position, you need to close it as soon as possible for the best price you can, and maybe put it somewhere else where you're going to fix it. So that's how you trade really, and the less you trade, the better. I'm telling you, these 3 trades that I just explained have been my only 3 trades for the past 2 months. Well, actually, trades that I entered, like when I bought last time, I bought all the way down here. So it's been months since I opened any position before the ones I opened now. All the rest, it's been selling. I have been selling here. I have been selling Bitcoin. I have been selling Ethereum. I have been selling my EOS. I have been showing every time I sold. Members get the signal in real time, but I have been showing even proof on free YouTube every time I sold my positions of the crypto that I was buying in the beginning of the bull cycle, and how I sold it at the end of the bull cycle and beginning of the bear cycle. And now, since then, I have just been away from the market. I did nothing other than entering these 3 positions that I just explained. This one, Ethereum versus Bitcoin, Bitcoin Cash versus Ethereum, and the OMG versus Ethereum, which I lost, and now the position it's closed, so it's not open anymore. I of course shared the screenshot when I opened it and when I closed it. So it was a 14% loss. So it's 3 trades in a very long time. The less you trade, the better, especially in these market conditions. Trying to time any chart, any time frame that's smaller than 4 hours, it's going to be very, very, very difficult, because the volatility is very high and stop losses will be run all the time. You're going to be having fake outs all the time. So the smaller you go, the harder it becomes. So that's all for the video of today. I'm gonna watch the news now. I'm gonna catch up with the markets, what's been happening for this past week, and then I will be updating again for premium members and extending your accounts for 2 weeks on top of your remaining days. Thanks for watching, guys, and I'll see you soon. Bye.